Hello, good morning and welcome. You've tuned into ET Now and this is Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. Google and Peter Thiel's fund, Mithril Capital, have invested $145 million in InMobi's mobile content platform. InMobi is India's first unicorn, and it is likely that Glance too has neared unicorn status with this round. InMobi's group founder and CEO Naveen Tiwari spoke to Chandra R. Srikanth from ET Now on the fundraise and plans for the IPO next year. Let's listen in.
A total raise investment of $145 million that we have raised from Google and our existing partner, Mithril Capital. So very happy with that, and it's a big validation for what Glance has achieved in a very short period of its existence in the last 18 to 19 months of what we have achieved in the form of completely changing the consumer experience of consumers of their mobile phones across India and across Southeast Asia. And as you know, what Glance does, it changes converts the lock screen into an AI-led content platform, and it's a very simple product, but it is a very engaging product which today has over 115 million daily active users who are spending more than 25 minutes on the platform. So we're very excited with this new development, and also very kicked about the fact that we've been able to build a very engaging consumer platform, from India, and we're taking it global.
Right, so for users wondering what Glance does, essentially when you leave your phone in lock screen mode, most Android phones that Glance works with, whatever content comes up here is most probably powered by Glance. So as Naveen said, such a simple but powerful innovation, because you end up looking at your lock screen multiple times a day. But Naveen, I read a quote of yours a couple of months ago where you said you believe your business to consumer, your B2C business, will be valued at over $1 billion. So does this current round of funding then make Glance a unicorn, which will be significant because InMobi is India's first unicorn. The fact that Glance also is now a unicorn coming from the same stable would be a pretty significant achievement. So does this new round of funding make Glance a unicorn?
It's very hard to comment on these things, and so I would refrain from answering that question. But what I would say is that this is, the first time InMobi became a unicorn. It was a great moment for us, and this investment from Google and from Mithril is a very, very, very substantial moment for us, and we feel very kicked about that. But from a valuation point of view, it's hard to reveal anything. But we're very happy with the fact that we're getting associated with, getting further validation of Mithril coming into this round and of Google investing. It gives a great validation for the innovation that we have made. So we're very kicked about that.
A lot of unicorns increasingly are talking about going public next year. Zomato has plans, Policy Bazaar has plans. Do you have plans of tapping the public markets?
It's a very lucrative time for, being a public company. Global public markets are doing exceptionally well. So it is certainly something that we will start to look for as we get into 2021.
Right.
It is something that we would talk about maybe in the first half of the year. Next year, and as we form up our plans on whether to go, when to go, etc. But it is the InMobi marketing cloud side of our business is doing exceptionally well. It's been the best year for us in 2020, and so we feel very confident about the business.
Well, that was the management of InMobi. Let's shift gears and talk about what's happening in the markets. There's been a mild recovery of sorts from the days, or rather the opening lows that we saw. Nifty, after falling down all the way to 13,192, has recovered a fair bit, but still continues to be about 0.3% down. 13,290 is where it's perched at. You have Sensex, which is losing about 150 points at the moment. Broader markets definitely underperforming more, with the small cap index losing more than 1%. Mid cap index is down 0.8%. In the morning, all the sectoral indices were in the red, and deeply so. There's been a bit of a recovery of sorts coming in for Nifty IT, which is gradually climbed up, and it's now gaining gaining with about 0.7% worth of gains coming in. Nifty Metals has turned positive but completely flat as we speak. Nifty Pharma is up about 0.3%. What is ailing the market at this juncture? You have Nifty Auto down almost 1%. Nifty Bank is down more than 0.5%. PSU banks are down 0.8%. Realty sector, FMCG also continue to trade weak, but yes, the advanced decline ratio has also witnessed some improvement with a majority of stocks, about 26 odd names advancing in trade as at this juncture. You have GAIL, which is up 2.3%. HCL Technologies has been doing well for itself since the word go, but right now it's climbed up quite a bit actually. It's up about 2.2%. Adani Ports, TechM, Bharti Airtel, Divi's Labs, Power Grid, Sun Pharma, all trading with a gain of more than 1% in trade. On the flip side, you have Tata Motors, Bajaj Finance, Maruti, IOC, HDFC Bank, Bajaj Finserv, IndusInd Bank, primarily financials and banking stocks, which are capping the recovery at least at this juncture. They're trading quite weak. Let's pull up the BNSN stock cloud as well to understand which are the stocks you need to keep on your watch list. Primarily driven by news flow and brokerage commentary. M&M definitely trading quite weak. The entire auto pack is looking a bit down in trade, and M&M definitely is one of the top laggards. SsangYong has filed for its bankruptcy. That's an update that's keeping it in focus. Some news coming in as far as SCI is concerned, that the government to invite EOIs for divestment today, and the stock definitely is something to watch out for. Meanwhile, you also have the likes of an NIIT, which is in focus. They're considering a buyback, which is on 24th of December. Some bulk deal action took place on Birla Soft's counter last evening. That's why the stock is in focus. When India also announced OFS. Avenue Supermart, well, Axis has initiated coverage on this one. It's Axis Securities, which has initiated the coverage with a buy target of 3,100. You also have Sadbhav Engineering coming up as the lowest bidder for a project in Gujarat. Overall Realty, another stock to watch. JP Morgan had come out with a note earlier today. Tata Motors sulking away on the back of fresh fear of COVID virus and fresh restrictions that have been imposed in the UK. So reacting to that, Piramal Enterprises also on our radar. Citi has come out on a note. It's an optimistic one, but yes, Piramal perhaps has had a rub-off effect of what's happening in the markets at large, down about 2.4%. And of course, we'll get you an update about Piramal's bid for DHFL as well in the course of the show. Varun.
Karanya. Let's now talk technicals and fundamentals with our guests. Kunal Bothra and Rajesh Agarwal are with us. Good morning to you both and thanks for joining in. Kunal, coming to you first, you know, when we opened with a gap up this morning, the interesting thing to see was if it got sold into or not, and it did get sold into. Now, if you look at yesterday's low, I mean, we're not even able to defend that. So, is there incrementally more downside quite apparent to you now? And then with that in mind, what's your call for our viewers today?
So good morning, Varun. Well, I for one expected that the markets could not hold up the SGX gain, which was shown in the morning, 170, 175, 5 points odd. And that was a bit unrealistic and too much to ask for, because damages like yesterday, what it does, it dents not just a short-term aspect and the short-term trend for the indices. It dents a lot of sentiments for many traders, and when that happens, you don't see traders going into a risk-on mode. There is a definite case of risk off which happens, trimming of positions, dropping down leverages, and trying to reduce or trying to curtail the risk which is there in each one's portfolio. So when you see such kind of a scenario, any rally would be taken as a welcome opportunity to try and trim positions and either build short positions or try and reduce long positions, as in how the case may be. So there was not a case where I for one believe that the markets could bounce back very sharply, at least in the first half of the day. And I think that's what exactly panned out. Bank Nifty opened up some 200 to 50 odd points, but you saw immediately the banking index saw a sharp sell off, and it came down to almost 400, 500 points off from the intraday highs in that sense. Now, the other point to look at is that how is the positioning from the option traders, because that generally predominates and dominates the near-term market trend. I for one believe that the option traders, the option chain indicates that 13,500 and 13,000 mark is where I believe that the bigger range of the option sellers and both on the call side and the put side are respectively. And when that happens, that generally defines that this is likely going to be the market range for the upcoming couple of days or for the next week or. And I think in that context, the volatility on the intraday basis may get a bit more heightened, but the end of the day volatility may not be as much as high as what we saw yesterday. So I think in that backdrop, I would expect that it's going to be very, very choppy kind of a market scenario for someone who's looking to buy or someone who's trying to build short positions. I think the only piece of advice over here is to try and curtail the amount of risk which could happen because of these intraday whipsaws. Now, in the backdrop, I would expect a couple of stocks to do pretty well for themselves, and especially expecting that the markets could go into some sort of a mode where these oversold stocks may go through a bounce back. So the first one which I'm recommending is a Barnes Sun TV. The stock coming to an extremely oversold territory from 515, 520. The stock came back to almost a 440 yesterday, and now bouncing off from those levels. It's at 460, approximately 465 at the last rate. I would expect the stock to bounce back towards at least 485. Would suggest a buy with a stop loss at 450. The second would be a Barn NIIT Limited. It's a mid-cap name. The stock, surprisingly, has been unfazed by the volatility yesterday and today's intraday volatility as well. It's trading with a bullish flag kind of a formation on the daily chart. So would suggest a Barn NIIT Limited. Targets to be kept at 195 and stop loss could be kept at 173.
Okay, let's also talk fundamentals with Rajesh Agarwal. Hi Rajesh, morning. Before you talk to us about the ideas you have for our viewers, could you also talk to us about how they could perhaps navigate this volatility?
Morning, Kamya. Yes, you said it right that the markets are in a volatile mode. After the relentless rise of around 5% on the indices in December, I think it was time arrived for a consolidation and some amount of correction, and which has been triggered by news of lockdown in London. And I think this is a healthy correction which was required because every day we found that markets were going up. But we should not forget with that there is enough liquidity in the market. Almost all the central bankers across the world has reiterated that they would be providing ample liquidity if and when required. So I don't think there is much to worry about since it's a liquidity-driven market. And the second thing is the hopes of vaccine being provided to people in the first fortnight of January being the trigger date. So I think there are positives. And the best part is in the next 10 to 15 days, the result season would start, and starting would be from the IT side. And IT, as we have seen the numbers in the past, I think IT is going to outperform. So any opportunity of this sort, maybe correction of 200, 300 odd points, 13,000 being a very strong base on Nifty, I think it is an opportunity to accumulate good quality stock. But I would reiterate that the stock's quality should be good. One should not be enticed by lower quality stock or the valuation where there has been a stretch on the valuation. So it is an opportunity to accumulate good stock.
Your ideas as well, Rajesh. What are some stocks that our viewers can consider for long-term wealth creation?
Basically, as I said, IT is going to do well because of one, the pandemic. People have seen that IT is being a savior, especially on the digital part. Last week, sensor results has also proven that the numbers are going to be good, and the next fortnight we would be witnessing a lot of IT numbers coming out. Hence, I would recommend a buy on Tech Mahindra, which is one of the leading IT companies in India. With auto moving up, I think there's a huge opportunity in auto. Medical devices are going to do well, and not to forget the kind of rollout we are all expecting in 5G. That could be a big opportunity for Tech Mahindra. even if you look at the valuation, it's trading at a less than 20 times FY22 earnings, which gives a lot of comfort. So I would say buy Tech Mahindra with a target of maybe 1050 in the next 2 quarters. The next one would be Bandhan Bank. This bank has been doing well with around 4,000 plus numbers of banking channels, 1,000 odd branches, 3,000 DSC. The numbers have been good. NIMs have gone up. Asset quality is stable. And it is a play on housing finance also because the group finance has been merged into this. The issues on shareholding pattern has been solved, and I think the valuations are quite cheap. If you look at the 52-week high number, that was around 600 odd rupees, and it's still trading at 385 odd numbers. So I think there is huge scope in this bank. One should accumulate at every depth, maybe with a target of 430 rupees in the short term, and maybe higher in 500 odd plus in the next 1 year or so. But for the next 3 to 6 months, we have a target of 430 rupees.
Jesh, time to slip into a quick break on Buy Now, Sell Now. Request both our experts to stay on. We'll be back with viewer queries in just a minute. Hi, welcome back to Buy Now, Sell Now. You're watching ET Now. It's time for the query section of our show. And the first stock that's kicking it off for us is a pharma one. It's called Suvain Pharma. And Jay Dalal from Mumbai has written to us, and he'd bought 200 shares of Suvain Pharma. And he's comparing the margins of Suvain to Divi's Labs, and he finds that there's only really 2 or 3 stocks in the entire listed space which have these kind of margins that have been sustaining it for over a 4 to 8 quarter period. So, Kunal, coming to you first, the Suvain chart has been really active lately. I think it's moved up from around $300 to 400 plus in the last 1.5 months alone, and it's also held its ground quite well during these last 2 days. So, what is your call over here?
It's done quite okay for itself. It's moved gradually very well. After that, I think it's that special situation which happened for Suvain, both Suvain, Pharma, and the other stock as well. I think both of them have picked up pace. Suvain Pharma particularly is a very low beta kind of a stock, and I think this is typically what an ideal portfolio should contain, because when you have market going into a kind of a volatile phase, these are the low beta pockets which will tend to outperform even in the tougher phase of the markets as well. So both on the short term as well as on the long term charts, I think it's a stock which looks fairly attractive. It's holding above the 200 moving average since quite some long time as well. So that's also additional positive for the stock price. So I would suggest a hold on Suvain Pharma since the investor the viewer has already bought it earlier.
Rajesh, do you also concur with Kunal? Should one continue to be invested in Suvain?
Yes, I second Kunal's thought because we should not forget the company has done well. Although in the second quarter the margins were below expectation, but the management has guided 15 to 20% of growth in the coming 2-3 quarters. Even the 600 crore capex which the company has planned is going to help in the long run. And with the kind of product portfolio and with the kind of focused approach that the management has, even when they have the execution capability, strong order book, I think one should definitely hold on to the stock. And if by any chance the stock comes to around maybe 10 to 15% correction, that would be a very good opportunity to add more to the stock. So I would say stay put with the stock, maybe with a target of 480, 500 odd rupees in the next 1 or 2 quarters.
Okay. Well, it's a consensus view then on Suvain. It's a hold from both our experts. Moving on to number 2 query. Sahil Parekh from Mumbai writes to us. He has India Mart in his portfolio. He sold it off at 5,000 due to low price correction. Now it has once again sold up 20% in 2 weeks. Is this a good time to enter or add again? Kunal, up until the market came to a screeching halt as far as the up move is concerned yesterday, until yesterday, India Mart has seen a dream run in the recent past, a new high almost on a daily basis. Talk to us about how it's likely to perform going forward, and should one add at the current levels?
So yes, I think I think it's an excellent chart. Currently, when I was looking at the stock, I remember I think the month of June, July, and August. I think that was a period where the stock started to gain a lot of focus. There was a very good price breakout as well. So these are all classical nature of technical breakouts when you look at, because 3 months and 4 months on a trot. I think from July till September end and October start, the stock did pretty well for itself. Managed to rise up from 2000 or sub 2000 levels to almost 6,000, 5,000 kind of level. So it was a steep kind of rise in a 3 month scenario for stock like India Mart, and that happened with very strong set of volumes. And then the stock went into time correction, which is what classically we look out for. That after a steep rally, if the stocks go through a pause mode, then that should be taken as a good opportunity to buy. Now that the stock has rallied up higher, if you look at the recent rally, and I'm talking about the last 2 weeks of rally for India Marts, it's on relatively very thin kind of volumes as what we had seen when the stock had rallied in August and September. So my sense is that the stock would probably come back to a median and a support kind of a zone or a mean reversion mode, like what we saw yesterday, for example, when the stock corrected almost 15 to 20% on an intraday basis. So I think at 4,800, 5,000 levels is where I believe largely the viewers should look to buy back again. The stock price, I would sense that the stock should come back to those kind of separate levels because of the fact that the recent rally was on back of very thin and very low kind of volumes relatively.
Okay, thanks for that, Kunal. So technically not looking too strong. But Rajesh, coming to you, this stock gets compared to Just Dial very often, but it trades at a multiple which is probably at least 4x of what Just Dial's is. So why is there such a stark difference? And at 65 times earnings, do you still find value here?
You said it right. At 65 times earnings, I don't find any reason to invest in the stock at this juncture. Despite the fact that the company has 70% market share, the traffic growth has been around 32%. The numbers have been pretty good with around 7-fold rise in bottom line. Despite all this, I think the valuations are overstretched. It's a good company, B2B, in the B2B e-commerce space, but there are problems of facing a slowdown. I think one should invest when it drops to maybe 5,000 odd levels, which Kunal has also said. So I would not suggest any investment at this juncture. Wait for a correction, then maybe one can enter.
Clear from both our experts, it's too expensive right now, so you might want to wait for a slight correction on an India Mart if you're looking to participate. Let's move forward. The next query we have is from Bhavya Shah of Mumbai. Deepak Nitrite, stock in focus. He's got an opinion that says this company has similar margins and return ratios to an Aarti Industries. However, it trades at only 18, 19 times earnings, whereas an Aarti trades significantly higher. So, Kunal, coming to you first on the chart, do you think Deepak Nitrite is ready, perhaps maybe in a quarter or two of good earnings, to show significant uptick?
Well, I for one believe that this is one of the few mid-cap names which should be a part of one's portfolio. And I for one believe that there are classical signals which the stock throws time and again, and you just have to try and observe the signals. And look at the period of Feb and March 2020, when all of these stocks the entire market was going through a big sell-off. Stocks like Deepak Nitrite, it had come back to just about its 200 moving average, completed that mean reversion process, touched back those levels of 300 and 350 levels. And then when the markets go into a phase, this stock also managed to go into a 2.5x, 3x kind of a mode. From those 300, 350 levels, the stock went to as high as 900 plus. So these are classical signs which you look out for. So if you look at the last 2 years of history as well, the moment the stock had broken out of this 200 moving average, it had gone through a different a trend altogether. So keeping that as a support, and I believe keeping that as a stop loss, I think traders should, the viewers should definitely stay invested on Deepak Nitrite.
Okay. Rajesh, how would you peg a Deepak Nitrite vis-a-vis Aarti Industries? Of course, it trades at a huge discount, but prospects-wise, what is your understanding?
We have a buy call in Deepak Knight right from the very long time, maybe when it was trading at 160 to 100 odd rupees. And still we are recommending this stock as a buy on dips to our clients. We should not forget the company has around 100 products with 1400 crore expansion done in the petchem thing. There has been some amount of anti-dumping duty in some of their products. The finance division is doing well. The margins have been stable. Q2 was better than Q1, and we believe that Q3 and Q4 would be even better. The company has huge prospects, and you said it right, the valuations are trading at a discount to its peers. It's a buy from our side, despite the fact that it has run up quite a lot. I mean, it touched a high of 938 odd rupees in the last week or so. But any dips gives an opportunity to accumulate this stock. We have a buy call. In the medium term, we have a target of 1100 odd rupees in this.
Okay, well, that's the verdict on Deepak Knight right then. Moving on to our fourth query. Karu Yadav writes to us from Patna. He wants to ask whether Chola Finance is worth buying into at the current juncture, given that it has once again recovered to pre-COVID levels. Kunal, talking about the technicals first. The stock price also has seen a very fantastic up move in the last 1.5 2 months from 230-40 levels now to close to 350 odd rupees. Do you think this is the right time to enter, or should one wait for further dip?
I think you should wait for further dip. The stock has a sort of a natural tendency to come back to its 50-day moving average, take support over there, and then manage to continue this uptrend. We've seen this behavior in the last, not just in the last 8-9 months from the March lows, but even historically as well. The stock has a tendency of coming back to those key moving averages and then bounce back. So for example, the current structure of the 50-day moving average for Chola Finance is at 317 or 318 levels. So give or take a couple of percentage points from there, approximately 320-325 zone could be a good support zone for Chola Finance. So if you're looking to buy, I would suggest that you should buy at those kind of levels for the stock.
So that, Rajesh, how about you? Do you think one can wait for a Chola to cool off a bit, or can you even get in now?
See, for a long-term investor, I think this is a very good bet in the financial space. The liquidity is very high with around 6,800 odd crores in cash and 9797 crores in total equity position, including the sanction limit, if you say. The numbers have been quite good. Bottom line has jumped. NIMs have been doing well. Asset quality is good. The best part is the management quality is very good, which is one of the basic factors when you invest in a BFSI company. If you look at the valuation, it's trading at a huge discount to its peers. I think it's a good time to enter into this stock with a long-term view. By long-term, I mean a period of maybe 12 to 18 months where we assume that from the current market price, the upside of 20-25% is quite possible. But seeing the kind of volatility in the market and the kind of correction we are witnessing, I think one can buy in a staggered way. Every dip should be taken as an opportunity to accumulate.
Okay. All right then. Thank you so much, Kunal and Rajesh, for joining us and helping our viewers out with the queries as well. Do we have time to take one more query? Okay, I think we do. Let's talk about query number 5, the final one that we have for today. Deepak Diwan writes to us from Bangalore. His observation is that home buying is at all-time highs with mortgage rates. He wants to look at a few mortgage lenders, and he wants our experts to recommend some names which look attractive at the current juncture. Kunal, coming to you first. Any names that come to your mind?
I think the stronger names in that category, you'll always land back to the same kind of quality names, Bajaj Serve and such are the kind of quality stocks. So if you're looking to buy these kind of names, then you should always tend to look at the large cap names first, because it just level of comfort in terms of the industry or the sector growing up well, but also gives you comfort in tough times or in volatile kind of times like what we saw in March 2020 or even yesterday as well. Many of these large cap names, they were relatively shielded as compared to the mid-cap names. So I would suggest that we go with the large-cap names, something like Bajaj Finance and the other relative peers. I think would be interesting bets over here.
So that, Kunal. Rajesh, home buying is a theme. Building materials have been on fire. Mortgage rates are the lowest we've seen in India in perhaps 10 or more years at 6.5%, and all the banks are competing at that rate. But, when you think of mortgage lending, ICICI Bank, 30% of the loan book is mortgages. So do you think they might be a preferred pick in this case, or do you have any other ideas?
You said it right. There has been an uptake in real estate, and we have seen property bookings going up especially in the mid segment. And I think one should look at LIC Housing Finance at this point of time because first one, the valuation is quite cheap, maybe around 8 times earnings, 1 time price to book value, dividend yield is good. They have a good parentage of LIC which helps them into garnering fund at a lower cost and the enhance account. Yes, there has been concern about some asset quality issues because of loan repayment in the pandemic area, but I think these are temporary things. And these kind of blips give you an opportunity to accumulate. I would see and give a buy on LIC Housing Finance.
Okay, great. Thanks for that, Rajesh. And on that note, thank you to both our experts for joining in this morning. Great to get perspective from you. It's time for a quick break now on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.
Welcome back. You're still watching Buy Now, Sell Now, and let's get back to our segment BNS and Explained, where we help you understand complex investing concepts with simple, easy examples as part of our investor education series. Today, we will tell you about cash flow and how it is calculated. Take a look.
We all have that healthy friend who takes a million selfies at the gym. However, when he or she goes home, it's a very different story. The same way in markets, how can we tell that the companies we invest in aren't just painting a rosy picture? How do we know that they aren't inflating the numbers and are making real cash profits? We at ET Now are about to help you find out. Cash flow can be a very difficult concept to wrap your head around. It's often confused with profits, and there are some complex terminologies which can be misleading. However, today we're going to simplify via 3 simple examples. Example 1. You're a seller selling 1 crore worth of merchandise. This merchandise which you're selling cost you 80 lakhs. Hence, when you sell it to the buyer for 1 crore, you make a 20 lakh profit, and your cash flow is equal to 1 crore minus the 80 lakhs which it cost you, which is also equal to 20 lakhs. Example 2. Again, you're selling the same merchandise at the same price of 1 crore. It also cost you the same amount to buy, 80 lakhs. So once again, your profit on the sale is going to be 20 lakhs. However, this time, due to cash constraints, your customer is only able to pay you 70 lakhs upfront, and he requests you to give him 30 lakhs credit. So this time, your net cash flow will be the 80 lakhs that you spent minus the 70 lakhs that you received, meaning you actually have a negative 10 lakh cash flow until you collect the balance funds. So in this case, your profit is the same, but your cash flow is actually negative 10 lakhs. On the opposite end of this, in the third example, you have a situation where you are again selling 1 crore worth of merchandise, which costs you 80 lakhs to procure. So like example 1 and 2, again, your profit here is going to be 20 lakhs. However, this time, your customer, feeling generous, pays you 1.1 crore with 10 lakhs as an advance for a future order. So in this case, your profit is the same 20 lakh, but your net cash flow increases by 10 lakh to 30 lakh. So that's how you evaluate cash flow transactions. Each transaction will give you the same profit figure, but it will never give you the same cash flow figure. And a positive cash flow, like you can see in example 3 or in example 1, are what you're looking for. What you're definitely not looking for is a negative cash flow, which you see in example 2. Okay, welcome back to Buy Now, Sell Now. The SCI EOI is confirmed. My colleague Ruchi Bhatia is now with us to walk us through the fine print and exactly the dates at when a possible stake sale could happen here and what the values are. Over to you, Ruchi.
This is a story that you first heard on ET Now, and now it is confirmed that the alternative mechanism headed by Home Minister Amit Shah yesterday gave a final go-ahead for finalization of expression of interest, following which the Department of Investment and Public Asset Management has put out the EOI for Shipping Corporation of India. Now remember, the government is looking to sell 63.7% of its stake and give up the management control in a bid to privatize one of its profitable PSUs, that is Shipping Corporation of India, that has a fleet of close to 70 vessels. Now we're given to understand that as a part of the PIM, the government has given a deadline till the 13th of February for interested bidders to show their expression of interest. In fact, the government has said that bidders can either independently or bid in a consortium, but need to have a minimum net worth of 2,000 crore rupees. Employees are permitted to take part in the privatization process. However, CPSEs will not be eligible. Remember, the government has already said that they will not sell one PSU to another one, and which is why CPSEs will not be allowed in the process. The government is also looking to hive off some part of the non-core assets of Shipping Corporation of India as well. However, those details will be shared with the interested bidders only at the RFP stage. Having said that, the government has moved a step forward. Both domestic and global players have made a beeline. Big players like Adani, Vedanta, GE Shipping, SR Shipping had expressed their interests. Besides that, DP World of Dubai is also interested in picking up Shipping Corporation of India. All in all, this is the second company after BPCL that the government is looking to privatize. Besides, of course, the loss-making national carrier Air India, for which the government has received multiple bids. So clearly, as I said, the government has moved a step further, and now needs to be seen which all players will be interested in taking up Shipping Corporation of India.
Okay, thanks Ruchi for that. Slipping into a break here. When we come back, we unveil the BNS and Quiz Connect answer and get you more insights on the market. Stay tuned. Still watching Buy Now, Sell Now. Time to unveil the quiz questions answer for the day. We asked you which pharma majors has the highest revenue exposure to the UK and Europe. The options were Suven Pharma, Biocon, Torrent Pharma and Aurobindo Pharma. The correct answer is Suven Pharma, and we have three BNS and Quiz champions for the day: Kuldeep Baid, Amit Agarwal and Chiluka Sudhakar. Congratulations all three of you, and thank you everybody else for participating. With that, we're timed out on Buy Now, Sell Now, so we're going to have to wrap it up. But many thanks for watching.